So one of my students recently called me and narrated a story about a mistake that he made. I want to discuss that with you. Okay, so he bought a stock called as HBL Engineering, and he narrated the story of that trade. So let me explain to you what exactly happened and what we can learn from this trade that he had taken. Before that, I would like to inform you, for those of you who are new to my channel, that I am a SEBI-registered research analyst. I don't give any investment advice. I don't give any buy-sell recommendations. I do not publish research reports. All of my content is for educational purposes only. You can read my disclaimer statement in the description box. Another thing you can do, if you go to the description of this video, there is this orange trading system. Okay, this is a model that I have prepared for traders to simplify their process. Download this. There is a link in the description box. Download this, print this, laminate this, and stick it in front of the wall which is facing you, so that you do not forget any of the steps before you are doing your stock selection. Coming back to the stock that my student bought and the mistake that he made, let us discuss that. So he saw this base here, HBL Engineering, okay, and he took this trade. So if you see, there are 4 points inside the base. You see this nice base, blue, green, red, uptrending stock. There are 4 points inside the base, mother baby candle. The high of this candle becomes the buy point. Very simple. I will not go into the details. Then the stock breaks out. That is when he bought the stock. Okay. We move this forward. So he bought the stock here. And then it shot up. It went up like how much? 25%. From this, went up 25%. And stop loss he must have kept at around 7-8%. So somewhere here in this range. So that would be his stop loss, roughly 7 to 8%. Okay, you see the stock never went near his stop loss. Now, let's look at HBL Engineering. Let's see whether this was a swing trade or a positional trade. So for that, we have to go to MarketSmith. And let's write here HBL Engineering. Yeah, HBL Engineering. So let's see here. I'll click on consolidated. You see here, the EPS growth rate looks good. Then sales growth rate looks good. Return on equity is fine. Earnings stability is a problem. EPS growth rate annual is fine. So there is one violation here. EPS growth rate consecutive 3 years, it is not going up. So 3 violations here. Then you look at the margin. Margin looks good. So this was a positional trade basically. So if you look at the fundamentals, I have 12 different criteria, out of which this stock seems to be meeting more than 7 out of 12 of the fundamental criteria. Okay. So fundamentals look good. Market, when he bought the stock, the market was in a confirmed uptrend. So this is October 2025. Let's look at the market condition. So this was 17th October. This was when? When did he buy? 13th October. So 13th October, the market was in uptrend under pressure. That means his decision to buy the stock was correct. In uptrend under pressure, you are not supposed to buy fundamentally weak stocks. So yes, he did enter a positional trade. I'm not checking the comparatives. Liquidity should be fine, market is fine, fundamental is fine, technical also looks good. Comparative, I am not checking what was the relative strength, what was the industry group rank. There are 5 different criteria, out of which I'm hoping that 4 out of 5 were in our favor. Okay. I'm just assuming that. Coming back to the chart, it went up 25%. He did not do anything. Then came a large falling window. The stock is still trading above the 50 SMA. By the time the stock reached here, the 50 SMA has already come to his break-even point. Okay, he did not book any profits. Then the stock collapsed like 10% in a single day. Okay, that was a disaster. He lost almost like 10% of his unrealized gain. Okay, then he did something that he should not have done. Oh, and by the way, when I was having a conversation with him, he said that he did not keep a stop loss after buying the stock. So that clearly violates, you see here, risk management. Now, whether he forgot to keep a stop loss or whether he deliberately did not keep the stop loss, that I don't know. But he did not keep a stop loss, which is a direct violation of this orange trading framework. Your system will not work if you do not manage the risk. Okay. So he did not keep a stop loss. So he took unnecessary risk. On top of that was one mistake. That was the first mistake. On top of that, I will put this is the 8 EMA, this is the 21 EMA. The stock collapsed. It bounced at the 21 EMA. Okay, so he decided that since it has bounced, now it's a great time to take a pullback trade. So at the close of this candle, he took another position. I think he must have doubled his position, maybe 5 to 10% position size here, another 5 to 10% position size here. Okay, he doubled his position, or at least increased his normal position size. Okay. Now, pullback trading is something that I've never taught my students. Pullback trading does work, but I don't teach that in my video course, nor do I teach pullback trading on my YouTube channel. But in Mark Minervini, William O'Neill kind of a system, pullback trades are legitimate trades. But I never taught him any how to take a pullback trade. Okay. He took the trade thinking that the stock will pull back from the 21 EMA. Took the trade, and then came another collapse. This is another 10% collapse with a falling window. So here the rising window was broken. Here there was a creation of a falling window. And remember, he never, what do you say? He never put a stop loss on his original position. That means we can safely assume that on this position also he never put a stop loss. Now, if you buy here, from here till here, how much money have you lost? From here till here, it's like a 10% loss. And on top of that, since the stock is here now, from here till here, how much money have you made? 3.3% roughly, 3.5%. So assuming both of these positions were the same size, let's say 7%, 7%. So on one 7%, you make 3%, 3.5. On another 7% position size, you lose 10%. Net, you're down more than 5%. Plus, if he has not kept a stop loss, and he has not, if he has not yet sold the stock, in spite of the fact that it has broken the 50 SMA, now he is down like 14, 15% on his second position, and another 1 or 2% on his second position. That's like a 16, 17% loss. Okay. What was the need to do this? So you see what are the mistakes being made here? Number one, stop loss was not kept. The entry was correct, the stop loss was not kept. Number two, profits were not booked. When you see unusual gain, when you see 12% gain in a day, this is 12% gain in a single day on more than 10 times average volume. Look at the volume on this candle. More than 10 times average volume, 12% gain in a single day. The profit was not booked. On top of that, so first mistake was that the stop loss was not kept. Second mistake was that the profits were not booked. At least partial profits should have been booked. Third mistake was that position size was added. More stock was added to the existing position in spite of the 10% fall. And fourth mistake is that on the second position, again, the stop loss was not kept. So there's another big fall in the stock. So when you do multiple mistakes in a single trade, you're bound to lose money, right? If you had just kept like 20-25% gain, like a simple target, 20-25% target, and a 7-8% stop loss, that's it. He would have been out of the trade with 25% gain. Now he's down like 3%. So in trading, it's not about charts. It's not about market conditions. It's not about Donald Trump. It's not about Elon Musk. It's about you and your state of mind. It's about you and your behavior. So in trading, a lot of time we we spend a lot of time discussing charts, but what about the behavior of the trader, right? And this is not some student who doesn't know how to take a trade. He understands this system. He understands how to take an entry. He understands how to identify a base, when to buy. He knows everything. He has studied my system completely. Still, mistake was made. So imagine if an educated, trained professional trader can make a mistake like this. Imagine what would have been happening to those people who don't have professional trading education. Imagine the disaster they are facing in their portfolios. Here, at least he can know that, okay, now the 50 SMA has been broken. Now it's the time to, just give up on the stock, take whatever loss has been booked. At least he can do that. But for those who do not have education, imagine they might still be holding on to the stock with the hope that it will turn around. That's the value of education. So it's not just education, you have to learn and you have to apply. And if you're not good at pullback trading, don't take pullback trades. Pullback trades are risky trades. In a pullback trade, you're buying a falling stock, but in a breakout trade, you're buying a rising stock. I just wanted to discuss this chart with you. Just because you are studying from my YouTube channel or just because you have bought my video course doesn't mean that you'll suddenly start making money. You will make mistakes like this. This has got to do with traders' behavior. This is about the trading psychology. This has got nothing to do with charting and everything. Entry was correct. The stock movement after the entry was correct, right? It's human decisions, it's human errors that are causing such problems. So it's a good illustration to help you understand that sometimes it is better to book at least partial gains. Sometimes it is better to move your stop loss to break even. Sometimes it is better to avoid pullback trading, especially when the market conditions overall are weak. Just because Market Smith says it is confirmed uptrend doesn't mean that you go ballistic and start throwing your money on stocks. That is just doesn't work that way. Okay, you have to uh, have control over your emotions. You need discipline and patience. So for those of you who do not have education, I invite you to study from my video course. I also invite you to download this page. This is just a single page, right? Download, print, laminate. If my student had just looked at this part, risk management, that is why I tell you, you just stick it somewhere on a wall where you can see this model, so that when you read risk management, you will immediately come here and keep a stop loss. Otherwise, you will forget. Okay. So download that model, enroll in my video course, learn from my video course. It will help you a lot. It will save you tons of your learning time. Okay. Thank you so much.